In the whirlwind world of real estate and finance, keeping abreast of the latest market shifts is not just beneficial, it's essential. As we delve into the May 2024 update from J-Wu Estate Agents, we uncover a dynamic landscape where resilience in real estate contrasts starkly with volatility in financial markets. Here's a closer look at what's driving these trends and what it might mean for investors and homeowners alike. Australia's housing market continues its impressive growth streak, marking 15 consecutive months of increased home values. April's National Home Value Index showed a 0.6% rise, consistent with previous months. This sustained growth, however, is uneven across different regions, with cities like Perth and Adelaide experiencing significant spikes. The resilience of the housing market is prominently due to a persistent supply-demand mismatch. Listings remain well below the 5-year average, creating a predominantly seller-favorable environment in most urban areas. Despite this, challenges such as escalated construction costs and labor shortages are stymieing efforts to boost housing supply, delaying any potential equilibrium in the market. External economic factors, including potential interest rate hikes and broader economic slowdowns, loom as threats. However, the fundamental supply-demand gap is expected to keep housing values buoyant in the foreseeable future. Perth leads the charge in home value increases with a notable 2% rise, while Adelaide and Brisbane follow with 1.3% and 0.9% respectively. Sydney maintains a steady growth of 0.4%, and Melbourne shows signs of stabilization. This uneven growth distribution highlights a multi-speed dynamic within the national market. Regionally, areas like Hobart and the ACT have seen consistent, albeit mild, increases over the past quarter. Interestingly, regional markets have generally outperformed their capital city counterparts, particularly in states like Western Australia, South Australia, and Queensland. This is in contrast to regional Victoria, where there has been a noticeable decline. The stronger performance of lower-end markets, especially units over houses, is indicative of robust demand in more affordable market segments, further fueled by the overall scarcity of available properties. April was a tumultuous month for U.S. stock markets, reflecting their worst performance since the previous September. This downturn was largely due to diminished expectations for quick Federal Reserve rate cuts, amid higher-than-expected inflation figures and ongoing Middle Eastern tensions. The S&P 500 saw a 4.2% drop, influenced by rising U.S. Treasury yields which surged significantly, affecting the attractiveness of stocks relative to bonds. This shift highlights the intricate balance between economic indicators and market sentiments, shaping investor behaviors in a landscape of uncertainty and high valuations. Looking ahead, the real estate market is likely to continue its growth trajectory, albeit at a potentially moderated pace due to external economic pressures. Investors and homeowners should remain vigilant, keeping an eye on interest rate movements and economic indicators that could impact market conditions. For those considering investments or property purchases, it is advisable to focus on long-term trends rather than short-term fluctuations. Personalized advice can be crucial in navigating these complex markets, and our experts at J-Wu Estate Agents are here to help guide your decisions. For further information or to discuss your specific circumstances, feel free to reach out directly. Your financial security and investment success are our utmost priority.